All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Last night, market or the world didn't fall off a cliff with the coronavirus, and so we saw Asia markets open up and they dipped. They went red. Some of them opened red, others kind of opened and then dipped red, and then they started to turn green. And we saw S&P futures, really kind of start to take off. And to put some perspective here, let me get my drawing tool here. There we go. But right here is where the market closed yesterday. Okay. And then this is after hours futures. So, about 4 hours after the markets closed here in the U.S. And as the Asia markets are opening, you can see this climb that futures made. And this is, as Asian markets, rebounded. Now, after that climb, we've seen pretty much nothing. It's been very flat. Yeah, we had a little sell into the open this morning and a little bit of bounce here since. But very flat since. This is just kind of a little bit of reflation from yesterday's action. There has the markets up about 15 points, and once again tech driven. Tech-led, semiconductor-led, and a little bit of consumer strength coming in here to it, but are seeing some significant leadership out of tech. And IBM helping to drive that. And we'll talk about IBM just a little bit more here. But still lag in the small caps today. In fact, the IWM this morning is up, 30, 40 cents? 40 cents here. So significant lag continuing there in the IWM, which, is tends to be a warning sign. Tends to be a warning sign. But, that's what the bears have. They have a few warning signs to get excited about, and that's about it. So anyway, that's, where things are this morning. Now, going into the challenge, we had two signals yesterday, AT&T, General Motors, GM on the downside, AT&T on the upside. AT&T having a nice morning this morning. Up about 40 cents here. But no new signals on the board this morning. If we just look at the scans, you can see the upside. There's not a single 3-7 crossover on the watch list that's happening, even though the market's up, right? It tells you there's not new trends being established the way we saw with AT&T yesterday. And then on the bearish side here, we have three, Caterpillar, FedEx, and Netflix. Now, the only one that could trigger here today is FedEx, and that would be a very interesting trigger. And very curious how it plays out. I did price out the options already, to see if they're playable, and they're playable. We do have UPS earnings to contend with if we do play it, and UPS is trading up about 1%, with FedEx down here today, but that has not been an abnormality there. So we'll see how that plays out. See if we get a bearish trigger here on FedEx into the close, but it is the only one on the watch list with a 3-7 downside crossover on it right now. Okay, so let's go out. Let's take a look at two stocks. Let's go talk about Boeing and let's talk about IBM. And I'm going to speak to them, mostly from an investment standpoint. But I did buy a couple weeklies on Boeing yesterday, just for kicks and giggles here. Again, a lotto, not something I would ever recommend, and just something to scratch my itch there. Bought them on the upside. Bought some, that expire this Friday, and they're out of the money. I need a rally to 320 for them to do anything. So, as they sit, they're not going to do anything. But, Boeing had some interesting activity yesterday, and the stock got halted. The stock was halted. It was halted for pending news. But as I watched the story unfold, as I watched the whole thing unfold, in long term, I'm very bullish on Boeing. I do have a partial, long term position in, but I have a lot that I want to add to it. I just haven't had the opportunity. And, I watch it and I go, okay, is this an opportunity? Is this, a place to go in and buy it or something of that nature? are we getting what is referred to as a bad news bottom? And I think if you're bullish on Boeing, that's kind of what you're hoping for, is that yesterday was a bad news bottom. That said, you can hope for it, but it's not quite there yet. It's not something I think you can look at and say, well, you know what, the bad news bottom is in. It's just going to go straight up, and off it goes. Boeing had the big pullback last year, March, on the 737 news, and it's been dealing with that, for the last year, basically. And yesterday broke into a new low. Now, this is the lowest of the lows. One of the things that we saw happen yesterday is we saw stops trigger. We saw massive volume on the breakdown, and the stops just triggered. And, a lot of stops set near these lows, which is kind of a smart place to put it. But when you put it at such a level that everybody else has their stops at that same level, chances are very good you're going to get stopped out. And one of the things we see happen a lot is a bear trap created in this, where the stops all get stopped out. Chunk, chunk, chunk. They all get stopped out, puts the big sell pressure on. Then we get some stabilization, and we start to see some buy pressure come back in, right? And we start to break back above those stop levels, right? What happens to all those people that got stopped out, right? It's not a fun feeling. And I think if you're looking at this and you're saying, well, you know what, we got this going on and that going on and this news and that news, I think you just look at this 320 level and say, okay, if we break back above 320, there's the opportunity to buy. You use the lows from here as the stop point from an investor standpoint, which is a very tight stop for an investor standpoint. And that's kind of the price action you're looking for. You're not going to get, this magical news piece that comes out that says, buy today because it's not going down anymore. That isn't going to happen. If you're sitting there staring at the news, watching the news, you're probably going to see the stock go up on bad news, right? And that would be a decent sign that things are changing. But I do think there's a good chance of a bad news bottom yesterday. Now, good enough chance for me to go and pile a bunch of money into it? No. Right? Good enough for me to take a lotto? Sure. But, I'm looking for that break back above 320. And, I don't really care, about the news cycle with it. Yes, I understand it affects it. It drives it, everything else. But, it's going to be something that it's constantly in the news, right? There's always news with it. So I want to see price action that, does say, hey, bad news bottom is in. There's volume to suggest it, right? But, I do want to see that kind of, whipsaw back in order to confirm that. All right. So, that's Boeing. That's kind of how I'm looking at Boeing, and nothing too fancy there. But I do think it's a simple setup going forward. Now, IBM. IBM had earnings after the bell yesterday, and they weren't all that great, right? If you really want to break down earnings and look at earnings just from a pure revenue and earnings standpoint, IBM earnings, we're going to see companies with much better earnings sell off 10% this earnings season. Yeah, IBM with lukewarm earnings, just probably not, or probably is overstating it. It's up about 4%. What's going on? Well, this is stock we talked about in December of last year. And I said this is one of my favorite stocks going into 2020 in terms of what the performance of this stock could be here in 2020. Why? Well, it had nothing to do with the fact that they're going to have fantastic numbers, or they have this big bad business turnaround, or all of a sudden all the analysts are going to go and upgrade it, because that's not going to happen yet. That's not going to happen. But IBM has this problem, and it's had this problem for a while. And this is an IBM chart. I know it says FedEx up here, but if you look right down here in the middle, kind of the upper part of the chart, it does say IBM. So this is IBM over 10 years. Stock price is in the blue. Okay, stock price is in the blue, and you can see that since 2013, It's just been downhill for them. And the stock has lost, what, 30%? Okay, it's been a big loser in a market that's been a big winner. So, it's not just that the stock's down 30%. You think about what the overall market has done during this time, and it makes IBM look even worse, right? You can see why it's gone down. It's gone down because the revenue has continued to fall. I mean, they were pulling in over 100 billion in revenue back here in 2012. Yeah, now they're down to 77 billion. That's a big cut in revenue. Is their dividend yield, is it decent? Yeah, it's a high dividend yield, right? You get paid 4.5% to sit on IBM. That's pretty good, right? Is their price to sales ratio anything? Yeah, it's kind of low, but it's been low for a while. But the story on IBM is revenue. And their earnings report, their CEO said exactly what I wanted to hear when it came to IBM. And what is that? It's not massive revenue growth or anything like that, but it says, hey, IBM in 2020 is going to return to revenue growth. That's pretty wow. Now, do they still have work to do? Yeah, I mean they still have margin issues, right? And things to do, but it's one of those where this is a story of a company that's been declining on revenue growth quarter over quarter, year over year. What's it going to take for them to start to have revenue growth? Well, it's not going to take a lot, right? The bar continues to get lower and lower, but if they start to have revenue growth, we'll be talking about a story that is very different. Take a look at their operating margins. They're down to 15%, right? We're not talking about margins that are improving. But this is a company that has a lot of bad in it, with perhaps the most important upside catalyst that a company needs to bottom, and that is revenue growth returning. If we look at revenue growth quarter after quarter here, you can see it's been, 2018, first quarter of 2018, second quarter of 2018, 5%, 4% revenue growth, then -2, -3, -5, -4, -4. Look at this. Came in at 0 this time, and projected next quarter 3%, 3%, 5%, 2%. Those aren't off the chart numbers, right? Those aren't numbers where you look at and go, "Wow, I'm going to salivate over these because I'm going to buy this stock and it's going to quadruple for me." No, those aren't the type of numbers. But you compare them to the revenue growth that they have been, it looks very juicy, and that's what this story is with IBM. Now, will they have margin expansion? Will they be able to turn the revenue growth into earnings growth? Will the analysts start to come back in and upgrade IBM again? All of that is still to be determined. But the number one factor that IBM needs in order to get to those things is happening. And it's happening because of the Red Hat acquisition. This isn't just all of a sudden magically IBM is turning, right? No, they made a change. They went out and they acquired Red Hat, which had revenue growth with it. They've been able to assimilate that. They've been able to start to put those revenue growths into IBM's numbers, and that's what's helping them. Now imagine you get the revenue growth going, then the margins start to turn around. Then the analysts start to turn around. Now you're talking about a multi-year type story, right, of significant upside, of a stock trading at 240, 260, 280. Okay. Do you need the market to go up? No, you don't. Would it help? Sure. One of the biggest flaws when it comes to investors is, they look at a good story and they go, "Oh, okay, this is a great story, but what about the market?" right? And they get caught up in the what about the market? What about the market? What about the market? Yes, the market is going to affect it in the short run, right? But in the long run, if you have a good story, you're going to get paid off, right? You think about what about the market? Well, IBM didn't go up with the market, right? And it flattened out as the market went up, right? But this story is now changing. This is the first quarter where we actually see the change happening. And it does. It bodes well. I'm not saying it's going to get the margin growth and it's going to get the analyst on their favor and all of that and the earnings growth. What I'm saying is that first thing that is absolutely needed is happening, and it's going to be fairly easy throughout the year for them to beat their comparables. You combine that with a 4.5% dividend, which is, when you look amongst Dow stocks, is one of the higher dividends there. You get paid to hold it, and you get paid a pretty price to hold it for that turnaround story. Is there risk involved? Sure. There's risk involved, right? If there's some economic chaos or something like that, then you could see some significant dip in IBM, but that's going to come with the market itself as well, right? So it's not like you're looking at different risk from the overall market there. But to me, one of the better stories that is shaping up for 2020, and when you look at their earnings report, got everything you want to see, and maybe a little bit more. Maybe a little bit more there. So excited to see IBM here throughout this year. It's been a long slog for this company. If you back this out to some longer term charts, you can see IBM is in a very, very long-term consolidation, right? I guess you'd call it that, about a 6-year consolidation there. But are things turning around in a different way than they have in a long time? Yeah, they sure are. They sure are here for IBM, and going into a year where companies like Microsoft, where companies like Adobe, where companies like Salesforce, they're going to have some more difficult comparables. Some of the easier comparables on IBM are going to look much more attractive to investors going forward here. Okay? Last thing I'm going to leave you with is this chart. One of my favorite charts of all time, and this was back in 2007. And Arthur Hill from Stock Charts, who writes a little commentary every once in a while, sent out probably the briefest commentary ever that I had seen from him. And he took this chart of Google, and he took it on this day, and he drew a line. And he wrote the word really. Right? That was it. That was the chart. Really? I mean, the stock went from 250 up to 360 in a matter of a month and a half. It was just straight up. Yeah, it had about 4 down days in it. But he put the question really. And I made the comment several times that if and when the market is ready to pull back aggressively, it's going to be fairly obvious. So why did I come to this Google chart? Well, let's take a look at how it's played out, right? I'm just going to go a few months here. Next day, stock went up again, and then it had this big day right here. It had this big follow-through on high volume, right? That wasn't, everything's going to hell in a handbasket right here. But it did say, all right, further rallies, right? Because the dip buyers are going to come in after a move like this. They weren't willing to chase, so they're looking for the first dip, right? And they come in, and then you start to see sell pressure, real sell pressure start to develop. And if you look at Google and what ultimately transpired, this is before before Lehman crash, right? Lehman crash didn't happen for another 8 months. Okay, so this is before Lehman crash, and you can see Google, really getting into a strong sell mode after this upward move. When I talk about something obvious coming in, this is what I'm talking about. This is what I'm talking about. I'm not talking about a little, the stock finally pulled back $2. I'm talking about one of these types of days where it's like, whoa, where it kind of catches investors, where it makes investors think about, wow, do I really want to be in up here? And then, yes, is there going to be some short term pullback? Probably, but there's going to be a topping process, right? And so those of you, and you hear me mention this over and over, that are super bearish, right? Yeah, fine, position, sure, but be aware that it's not something where you can go out and buy weekly puts each week and say, well, they're just going to pay off because, well, things are just way too high and have to go down. Very often, there's an obvious type of, woo, okay, something's shifting, and then some sort of process that happens before a more sustained, prolonged type of breakdown. So this is Google 2007 to 2008. If you want to go take a look at this chart, they're with you. All right. So anyway, that's Boeing, a little bit on Boeing, a little bit on IBM, and a little something for the Bears. Take a look at there. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.